The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN Tuesday morning, just after 9 a.m. Eastern Time. We got about 24 minutes to go until the start of trading, and we got markets in positive territory across the board right now. We got crude back above $81. Interesting volatility in both directions yesterday. We spike higher on crude. This morning, S&Ps were positive by about 0.5%. We're up by 18 points right now at 39.77. But we're more than 30 points off of where we were at about 3 a.m. Eastern Time this morning. You jump over to Europe, you have markets higher with the FTSE up about 0.75% right now. DAX up 0.1%, CAC Carol up about 0.1%. Over in Asia, you got the Nikkei up 0.6%. Shanghai barely positive by a few points, and the Hang Seng actually negative by about 1.3%. So S&P's positive by 18, NASDAQ positive by about 0.3%, up by 37 points. The Dow pushing the highs that we had early yesterday, pushing about 33,900. Interesting, right? When you compare just the last couple of days, two-way action in the Dow, we're actually pushing the highs we had at 930. S&P's actually above that level. NASDAQ below that level. So S&P is looking a little bit stronger right now just in terms of where we are this week in terms of relation to the other markets. You have the Russell right now stronger, as in above yesterday's highs as well, with the Russell up about 0.5%. Bitcoin, we're going to talk a little bit of Bitcoin again this morning, man. The headlines just don't stop. In terms of, is it Genesis, I think I saw, talking about the risks of bankruptcy this morning, and Genesis, folks, is tied to GBTC, and we'll pull that up in a moment. But you think if you believe that they say that they're all set, they might be. I don't think the risk is worth it, though. That's the thing you have to quantify. There's your price of crude on the volatility yesterday, up to 81.17. We were just up at about 81.63. We got the gold contract up $4, but we just gave back about $5 from 17.50 a couple hours ago. We're trading at 17.44 in the price of gold. We jumped to notes and bonds. A little bit of higher price, a little bit of lower yield, but as you can see, just kind of chopping around on the 10-year from where we were basically last Thursday. The 10-year yield right now, 3.795, so almost 3.8% basically the yield on the 10-year right now. We jump over to the volatility index, and hey, it's almost Thanksgiving, man. It's Tuesday. We got 48 hours until Thanksgiving. Market open for a half day on Friday. Expect a slow one, man. And Wednesday, not sure if you're aware, be safe in the holidays, folks. Drinking and driving, it is the worst, okay? And somehow people think that, you have a couple drinks and people, you got to plan to be as safe as possible. And that is, you know what? You're going to go out, you're going to have some holiday fun, whether it's the night before Thanksgiving, the weekend, holidays approaching. Take an Uber, man. Ubers were not around for the longest time. There's very little excuses for how many people get behind the wheel, unfortunately, man. And the reason why I bring it up is, I had a great opportunity to work for a Budweiser distributor in Philadelphia when I was there at Villanova University around the year 2001, 2002. Yeah, 20 years ago, working for Budweiser distributor in Philly. It was a great opportunity, man. They did all the big sporting events. I went to the NBA All-Star game there and got to see Jordan in the All-Star game as a free perk. Not to mention my job was literally going around to the bars around Philadelphia, Bryn Mawr, Villanova, and running promotions for Budweiser with a $100 budget, and everywhere I went had Bud Lights that were on sale for $1. So I got to walk in and buy everybody Bud Lights for $1. But I come back to the point, the night before Thanksgiving, folks, Wednesday is the busiest drinking day of the year. So be careful on the roads, be safe, plan for it. That's tomorrow night. It's a big party night. Didn't realize it was the biggest, but however it falls on the calendar, people coming home. I remember my high school at the time, Noble and Greeno, they always have a young graduates get together that Wednesday night. Unfortunately, I don't fall in that young graduates category anymore. Probably haven't for about 15 years as my 25-year high school reunion comes up this year. But as you see, everybody gets together. Nobody has to work on Thursday, except for, unfortunately, some in certain areas, of course, but you get the point. And Friday, a lot of people have off as well. So nonetheless, Wednesday is the biggest day out there for drinking. So be careful. Plan for it, man. I know I'm kicking the show off like that. Didn't plan for it, but it's worth it to say it, folks, because you got to plan for it until you get in those situations. Don't think you're just going to figure things out after you have a few drinks, okay? All right, let's jump around to what we have going on, and let's talk a little bit of crypto, man, because it's interesting. If you've been listening to the program, what have I been talking about? I've been talking about the comparisons of crypto, the risks, and what do I pull up this morning, man? On the front page of Bloomberg, right? Let's pull it up so you can see. Poker. Alameda's former co-CEO used poker strategies in crypto trading. Getting into it. May or may not be banned from 3 casinos. Ex-co-CEO tweeted aggressive risk-taking on display at the center of the FTX blow-up. Degree from MIT. What's the movie that Kevin Spacey was in, right? Those card counters, the MIT blackjack team. Man, I remember reading that book. I'll have to figure out that book so I can get it. MIT blackjack card counting team, folks. They were out there running around casinos. They made a movie about it with Kevin Spacey, I believe, was in it. Great movie. It's math, folks, and that's the bottom line of it. And if you're aware, you count cards, you can beat blackjack. And what will happen is the casino will kick you out, and that's what they do. They figure out you're counting cards. They're able to watch your strategy, and you're doing counterintuitive things at the table that you'd only maybe potentially be doing if you were counting cards and had an idea of where the count was on the deck and how many high cards and low cards had come out. But nonetheless, it comes out, man. And not surprising, as these two merge, it's unregulated exchanges, taking money, gambling to a degree, and yeah, I would say risk in a big way. Yeah. Bigger is bigger. He wrote January 12th, always wanted to do this, playing in the World Series poker. I mean, there's nothing wrong with that. It's just amusing how everything plays into there in a big way. Because it is gambling, folks. And guess what? Trading, investing, it is gambling. I used to tell people, and there was a period of time that I played online poker basically exclusively for about 2 years. I was always playing it, wanted to give it a shot, had the ability, played it for a couple of years, traveled around the country, and I would tell people that's what I did. I would explain slightly. What I did was I played basically online, and I would play about 20 tables at a time, playing cash games, and at the time, PokerStars, you could play 24 tables is what you could play, was the limit. And they had tracking software, completely legal for all the regulations in terms of that site, in terms of the rules they allowed. It wasn't like cheating where I was tracking. Everybody really was doing it if you knew what was going on, because that's what you did. You had tracking software that was tracking only the hands you played. Okay, and by tracking the hands you played, you were privy to that information. You could not buy hand histories, and this was a big deal in poker. You would buy hand histories, and you'd get all this information on the players that you were up against, and meanwhile, they would have no information on you, right? But you were allowed to have the history you played by yourself, okay? So you played 20 tables at a time, 24 tables potentially, and I would tell people, and they would think gambling was far different, and I would say it's gambling with a positive expectation. Everybody hears gambling and they think of slots, right? Don't play slots, folks, unless you're going to okay with lighting that money on fire, and it's an expense for enjoyment. You can gamble, as many of us do in the Tigers Den, on a short-term basis, folks. I don't think you can say you're investing when you're shorting the S&P for a 3-hour trade, right? You're gambling. You're trading, okay? Same deal. You're gambling with a positive expectation. So that's what's going on, but not surprising, man. That poker running a ripple through, no pun intended, ripple, through that industry as they keep going. And we'll talk a little bit more because Genesis, they might be going BK. They're tied to GBTC. Stay tuned, folks. We'll be talking to our man Kevin Hincks when we get back, though. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We get the S&P up 19, NASDAQ 100 up 36. We get the Dow up 162. And jumping around to some of the articles I pulled up. So we're going to jump to, as I mentioned, GBTC and Genesis. So my dad was talking about this on his show last night. I was talking about it just in terms of they won't show their proof of reserves because they say there's security issues. That may be the case. I don't understand it well enough. But when you can't decipher the probability of an event occurring that is priced into the risks of what you're gambling on or investing in, be aware that it's very difficult for you to have an advantage where there's others that may have greater information. So, I can't assess whether they're being real, whether that's a real thing, that they can't show their proof of reserves. They can't tell anybody and prove that they actually have the underlying assets to the fund. Meanwhile, the fund is trading at almost a 50% discount to the net assets. Right? Things were able to disassociate from reality in crypto for long enough, but realize that everything is coming back to fruition, folks, okay? So I just want to read you one article. This is CoinDesk, which is a pretty big informational site for cryptos, I believe, okay? And I'm a pretty big novice in terms of crypto, okay? But Bernstein, this is what they're saying. Bernstein says that GBTC is protected from the fallout at the sibling company Genesis Global, okay? If Genesis is forced to file for bankruptcy, creditors will have no claim on GBTC assets, the report said. This is the Bernstein report, but this is coming from CoinDesk, okay? So I wonder where CoinDesk, now I'm being a little sarcastic, okay? But just hear this one out. Grayscale Investments, which manages GBTC, and Genesis, and this is what my dad talked about, but it's pretty interesting to put it in fruition with CoinDesk too. Grayscale and Genesis are both owned by Digital Currency Group, as is this entity, CoinDesk. So CoinDesk is telling you everything's going to be all right. CoinDesk is owned by Digital Currency Group, and they're saying, Bernstein, maybe I didn't read it, but take it for what it's worth, man. This intertwined nature of everything here has a very real potential to intertwine and unwind in pretty dramatic fashion, as we're seeing. But it's kind of tongue-in-cheek amusing when you really look at it that the reporting here is owned by DCG as well. So they're both owned by DCG. CoinDesk is owned by DCG, and CoinDesk is telling you, don't worry, folks, everything will be all right. So take that for what it's worth, man. We jump over to GBTC. And you're catching a little bit of a bid today. You got Bitcoin up today as well, probably rising on some of those reports that I was just talking about, as people believe it. But I would not be touching this thing, folks, even at the discount. And I don't know why Bitcoin's sitting at 16,000, because it feels like that needs to have a moment of capitulation far below where we're at, because it doesn't seem fair that Bitcoin was at 19,000 and the whole world gets wiped out, and now you're at 16,000. Just as traders, assess that risk, man. From a risk-reward standpoint, does it really make sense that thing's going to accelerate to 30? I'm just giving you the risk-reward, folks. We know it's possible in a two-way market, but boy, it doesn't seem like the fallout's taken place just yet for everything that's going on in there. All right, let's jump around and see what else I had pulled up here. Yeah, and that's the headline to tie it into. Okay, so Genesis is said to warn of bankruptcy without funding, and meanwhile you got Genesis and GBTC owned by DCG, also owns CoinDesk, and there everything goes. All right, jumping over to Tesla. Yeah, how about this one, man? This thing, Tesla was down big yesterday. Let's jump over, see how it's trading this morning. This is going to be a case study as well, so they get a little bit of a reprieve, man. But boy, the thing's lost half its value in 2 months. In any other universe, folks, the world would be imploding in terms of any CEO would be lasting. Somehow Elon's gotten severe latitude here, but you're talking about more than cut in half now from where? Folks, the Twitter saga began around here. Remarkably enough, you know what happened? Is that, and this is the crazy thing, okay? Because I'm pretty sure, and please, somebody tell me if I'm wrong on the dates, but I'm pretty sure that over the weekend, from April 1st to April 4th, was when news first broke of something to do with Elon and Twitter, because I remember thinking, oh man, Tesla's going to crash, right? And what happened was it went up. So that's remarkable. Well, yeah, it crashed, folks. For anybody, you had a day, which is the most interesting part, right? Elon starts his Twitter quest. Tesla had just gone, okay? Coming into that, Tesla had just gone from 250 up to 380. Elon announces he's going after Twitter. You get a one-day reprieve where this thing accelerates from 357 to 383. And yes, the market sold off in that time, but nothing like we're seeing with Tesla, man. And then it's a one-way trip from 380 to 220. You catch a reprieve, and now we're down at 167. You're catching a pop today. I mean, it's the best reality show out there. That's what I'll say in terms of what's going on. Yeah, exactly, man. Don't worry, because everything's going to be all right. Not sure it's going to be all right in crypto, man. I would make sure if I had anything anywhere that I was okay losing all of it. And that's the way you want to approach things. You want to put some money in action, man, looking for a bounce? Sure, go for it. But realize that you're probably risking 100% of your capital, no matter where you put it right now, man. Because I was talking to my dad, it was last weekend we were hanging out. We're saying anytime anybody has to tell you and has to deny reports that they might go bankrupt, that right away means they might go bankrupt. If there's a 0% chance they have to go bankrupt, they wouldn't have to deny it. So at least put a probability on that number. When you hear companies like Coinbase saying that they won't go BK, and I'm not saying they are, man, but when you have to deny it and your stock just goes from a price point, but no, credit to the investment bankers on this one. Push it out to the public at 350 to 400, and within 2 years, it loses 90% of its value. And remember, folks, not a coincidence, okay? April 12th of 2021, April 12th, 2021, they run Bitcoin up to 65,000. Not sure how they had it happen again, but nonetheless, obviously an irrational high from where we are right now. Not a coincidence they pushed that money out to the public for Coinbase as they were accelerating crypto higher from doubling in price from January to April. They go public, and Coinbase loses 90% of their value. Yeah, same deal, man. Somebody says, trust me, say why. Exactly. All right, what else do we jump into? So the Disney deal will be interesting. Some reporting, of course, today, just talking about the process and how quickly it came. I talked about it on my program yesterday. Pretty remarkable that only 5 months ago. So Disney gives back a lot of those gains yesterday. We were from 92 to 102 almost, and you give back about half of them to end the session, just above 97. We're barely positive this morning with the market. And as a Disney shareholder, just for longer-term positions, folks, I am encouraged in a big way to get a change there, because in the longer term, it might end up being a good thing in terms of foregoing any type of profits in the immediate term, which is why the stock's gotten punished so hard, right? But their Disney Plus streaming platform has accelerated pretty dramatically. Disney's accelerates higher, and this article here was just interesting. We'll talk a little bit when we get back, talking about how quickly this all kind of came to fruition. And what we'll bring up as well, because take a look at this. So just as recently as November 5th, he was somewhere and they're talking about, no, I'm happy being gone. Yeah, but it was just 5 months ago, folks, that the board unanimously gave Chapman a 3-year deal. Little missing some corporate governance there, to say the least, to the tune of tens of millions of dollars. But nonetheless, we'll be back, folks. S&P's up by 20. I'll be back for the opening bell. Stay tuned.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstad's Tiger Forex Report. Teddy Kegstad breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open, and you're looking at an S&P positive by about 20 points right now. And interesting, when you look at it, I mean, basically, we just could have completed a pretty short-term A to B, C to D. I got a 5-minute chart up here on the S&P. You accelerate from about 39.45 to your B point of 39.70. That's talking about 25 points to the upside. You're sitting at a point of about 39.56. That would bring you to 39.81, which would be a completion of an A to B, C to D. We're pushing that limit right on the open. We'll see where we go. NASDAQ 100, we're up by 28. The Dow catches a bid, man. We're pushing 34,000 in the Dow, and you get the Russell right now up by 8. Crude hanging above $81 right now. You get the gold contract up by 4. Let's jump around to some of the currencies as we open the trading day. We got the dollar index giving back some of the gains of yesterday. We jump over to the dollar yen. Putting this on a little bit of a daily, so climbing towards some of that line in terms of the trend line, 141.43 in that dollar yen. All the currencies well off the highs that we had just recently. All right, jumping back to the Disney deal real quick. So Disney gives back some of the gains. You're at $96, and I talked about yesterday. So they gave Chapman that 3-year deal in June. So it wasn't like things were insanely different. The stock was already getting decimated. This earnings season probably saved him in August. He probably gave an indication of what he was going to do next month, I'm guessing, or at least in talking with other executives at the company. He was able to keep their confidence through the earnings event in August. But as you'll see, man, things move quickly. They lost $1.5 billion in the direct-to-consumer. And this is what's funny. It's not funny, but just realize things matter in your own head, right? Because even I, in talking to just people outside of the market, friends, even I cherry-picked in a bear point that, my goodness, in 90 days they lost $1.5 billion for Disney Plus, and they're probably not going to make any money in it for a couple of years, right? Whew. And the market made them pay, man, okay? Now, they're talking about Iger here, okay? And it says in this Bloomberg article, okay, when Disney reported the dismal fourth quarter earnings that stunned Iger and Wall Street, the company disclosed a $1.47 billion loss at its direct-to-consumer business led by Disney Plus. The stock sell-off was Disney's worst in 2 decades. Mentions that Kramer wanted a new CEO. That may be, as they're talking about the death knell for Disney, but nonetheless. And so he had responded with cost-cutting. There were things that were going on. You have Avatar coming out soon. They mentioned here that he, wasn't even going to allow some of the staffers that had been working on the marketing to attend the premiere. They're really trying to cut back everything. And then you had activist investors coming in. And that's why this thing wasn't too surprising, okay? Because I remember when the story came out for Peltz assembling a stake worth more than $800 million. You better believe leadership was in play, man. All right? Yeah, and so it starts here that the CFO, where were we? So they just contacted him late last week, okay? But it starts here, it mentions with the CFO, I believe. Come on, where are we? All right, a little further down. All right, I'll find, here we go. Yeah, so after that happened, you had the CFO, Christine McCarthy, began discussing with the board their loss in faith. You had the activist investors in there. And they just contacted Iger late last week and asked if he would consider returning. Over the weekend, they agreed to a contract of $27 million for 2 years. He's a big shareholder in there, I believe. So they were saying he was watching things as a shareholder, of course. And he emailed them to Disney employees at 9:42 p.m. New York time. A number of the execs were at an Elton John concert, and they thought it might have been a joke at one point. And, of course, not surprising that they would think so. Pretty out of the blue. But, yeah, losing $1.5 billion. And what they went through here is, they had a strategy, folks, in December of 2020, I think they talk about, or they came out somewhere, maybe in this earnings with their strategy or what they were looking for. And even in the face of the world changing dramatically over that time, they were sticking to it no matter what. And that was a problem in many people's eyes in terms of what was going on, not to mention the managerial aspects. He wasn't even allowing some of the department heads to pick their own movies, so he rubbed people the wrong way. The stock's down over 25% basically since he took over versus the S&P being up about 25%. And yeah, losing $1.5 billion over 90 days. But you know what, man? In the long term, they got some amazing Disney Plus subscriber numbers, folks, and you're going to get Iger in there, who's probably going to right the ship over the next couple years. It's not going to be a quick trade in terms of the problems they're facing are going to persist. But boy, Disney has caught up with Netflix pretty quickly in pretty dramatic fashion. And if you go back on this, okay, and you look at where this thing is, you're talking about, folks, when they announced the plans for Disney Plus, okay, and I had run this over many times, that was in April of 2019. Okay, they were very fortunate that they ended up launching Disney Plus literally months before the pandemic hit. Timing is everything, folks, and sometimes it's just the luck of the draw, okay? Disney Plus, they launched it. I mean, if they had just been late by a year, right? If the pandemic hit somewhere in 2017 or 18, they probably try and accelerate it, but they don't have Disney Plus ready. They launched Disney Plus months before. They ended up putting a lot of their big-ticket movies direct to Disney Plus. I was at home watching those movies, right? It foregoed a lot of earnings, but it drove people to the Disney Plus subscriber base that they'll probably stay, and it's a bigger base than you would have had if you took in that money. Well, guess what? The stock's at 96 because you weren't taking in the profits, and you're still spending so much on content without making that money. But in the future, those people are signed up for Disney Plus, folks. And if you have kids in the household, I don't know how you don't have Disney Plus, man. It's a great service. Now, what I will say is I signed up for the bundle, and I do not use ESPN or Hulu whatsoever. So I probably got to go cancel that. They got me for the bundle originally, and it'd be interesting to see how that goes out. One of the things that they talked about, and I don't understand this well enough at all, it's not a reason why I'm a Disney bull. Part of what they own is ESPN, which is a good piece of content to own. But now there'd be a little bit more speculation that maybe Iger does something with Disney, so that news could potentially break. He's got 2 years, man, and he's going to move quickly in a big way. All right, let's jump around to some of the other articles we got out here. Stocks, not articles. And we got Best Buy reiterating, their holiday forecast, man. They're up by 11%. We jump over to the headline with Best Buy. Where am I at? Come on, where was I? Did I close that article? All right, I'll have to find it. But they reiterated their forecast, and the market's going to like that. Here we go. Hold on. No, I can't find it. Okay. So they had strong numbers, and they reiterated their forecast for the holiday quarter. And, they're not seeing waning demand at Best Buy. You put this thing on a weekly, though, from 174 to 70, cut in half. I mean, it's kind of a case, folks, when expectations are everything sometimes, and you're at $70 versus where you were last year, above 100 for the entirety. Yeah, Dick's Sporting Goods, they had their numbers as well. Pretty decent numbers. You're up by 3% right now. Better than expected profit and revenue, and an unexpected increase in comp sales, and they raised the full year forecast. Much closer to last year's highs. So expectations a little higher. You're up by 3%, though, nonetheless, for Dick's to 110.38. Stay tuned, folks. NASDAQ slipping into the red. We'll be right back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. The market, not quite comfortable with where we opened up. We complete that potential ABCD. Looks like one now when we sell off right from 39.80. We're up by 7 points. You get the NASDAQ 100, negative by 46. Let's jump around to some of the big dogs. Apple, off by about 0.5% to start the trading day. Microsoft, negative by about 1/10, but they were just pushing 244 or at 241.75. We'll jump over to Google, down by 0.8%. Meta shares off a full percent over there. See how Netflix is trading today, off 2% for Netflix shares. Disney off 1.5%. Negative action, man, going on in this market. To tie it back together again, all right? Can't help myself, man, right now. And this is what I was talking about. So FTX's chief, and this is a New York Post article from when? 2 days ago, okay? FTX's chief regulatory officer, Dan Friedberg, tied to online poker scandal, and the fact that he was the chief regulatory officer for FTX, okay? He was a lawyer who, back in 2008, okay, now I'm jumping around, but let me pull this up to get the whole deal. In 2008, okay, Ultimate Bet was a poker site, and it ended up being that basically that one of the original founders, Russ Hamilton, had built himself a backdoor access to play poker and see everybody's hole cards, okay? Employees between 2005 and 2008 were accused of using a software exploit dubbed God Mode to bilk players out of anywhere between $20 and $50 million, okay? There was a 60-minute story on it. If you were in poker at the time, man, it was a big deal. Obviously, Ultimate Bet was a huge poker site at the time. And the reason why people lost so much money too, folks, and this is a great lesson, okay? There's a lot of lessons that I got to see play out in poker that served me well when crypto popped up, at least to understand the risks that you were dealing with, okay? Because, number one, greed was there, okay? You had a lot of kids that lost a lot of money. And I say kids because they were young people at the time as well as old, but a lot of young people playing online poker. And the key to why is because they would play this user, okay, and they were playing crazy. So imagine you sit down at a poker site with $10,000 and the person across from you is playing like they've never played the game before with $10,000. They're raising you with 7 deuce offsuit. They're calling you with 9 high or something crazy. So what happens? You get unlucky. They make a lucky play. They take your 10 grand. You rebuy. You say, no way I'm leaving, man. I can beat this guy in my sleep. I know that I'm a poker player, and the law of averages over time, it'll revert to the mean, right? I just need a larger sample size, and I'll be the winner that comes out because I'm putting my money in ahead. So they rebuy. They rebuy that $10,000, and lo and behold, they lose again to some crazy unlucky call that he makes that normally is a very bad move, and he just got lucky in that one instance. You get the point. They kept rebuying, thinking they were playing someone that was horrible, and meanwhile they were playing somebody that could see their cards the entire time, and they went over the stop losses that you should have in that type of an instance, losing almost everything. So what happens? This person was a lawyer at the time for Ultimate Bet, and he had recordings of conversations that surfaced at the time. And what does he do? He somehow gets to be the chief regulatory officer for FTX. So if you think everything is out yet, folks, don't think it, because it just keeps popping up. And it's not a coincidence. I've been talking about poker, man, as it seems that it's a repetitive theme in the industry. And, you know, back in the time, I remember thinking, boy, if you were a hacker or something like that back in the 2000s, folks, from about 2002 to 2011, in the heyday of online poker, if you were a hacker, there were so many instances where people doing very nefarious things in the online poker industry, because technically it was illegal, and you had everything based offshore. So there was really no criminal prosecution that you risked. You would try and hack accounts, right? It was always what happened. And if you got caught, there was never anything that happened. And there were always stories of massive, massive hacks, and because people were playing with large sums of money in pretty dramatic fashion. Those risks are always present, folks. And to see them play out in crypto, it's a bummer. So hopefully we'll see how it goes. But it's not over, man. Let's see how GBTC is trading this morning, as it's up 3.9%, maybe getting a little bit less of a discount. But as I said, I would not let my money touch that thing right now until you see how Genesis plays out, and until you see how the fact that Genesis and GBTC are owned by the same entity. And you got Bernstein supposedly saying that they don't matter, but who's telling you that Bernstein said that? CoinDesk, who's owned by the same people as well. Yeah. And the bummer of it is that it didn't have to be an illegal operation. You probably could have built that thing to a degree, obviously not to the degree that it came, because funny money was getting played around. But greed is a killer, man, and you see it play out all the time. And there's no reason that he probably had to do that to that degree, but he wanted to take over the world, and you don't go from $0 to 30 billion without taking some risks. But hopefully the lies are going to catch up, because that seems like it might be a pretty clear case of fraud in terms of what he's been saying and the legal gymnastics he's trying to play to say that the company funds were never traded. They were just loaned out, and that loan was collateralized, and unfortunately that collateral did not hold up. I don't know if that's going to play out. We're going to see how the courts decipher FTT being collateral when it's basically tied to the value of the loan itself, and both are going to deteriorate one and the same. So it's not really collateral at all. You can't have collateralization that's completely tied to the loan itself, so both get destroyed at the same time. That's not how it works. Okay, let's see what else I got pulled up here. Housing. Worst time to buy a house and a home. Excuse me, to buy a home in a generation. The U.S. survey shows, boy, it's pretty dramatic what happened in terms of houses going up. And then you see the mortgage rate going up, really hitting the payment. Soaring mortgage rates have sent U.S. housing market into a tailspin. And this is the share saying it's a bad time to buy a house. 83%, man. Index of buying conditions related to interest rates at 64, whatever that means, back to the 80s. Not surprising, man. Excuse me, folks. How did that happen? Thank you. There we go. I wasn't sure what you were talking about, Dan. I'm saying, where are those ears coming from? What's going on in there, man? All right, we'll finish this one up. We got one more segment, folks. Apologize. We got the mic back. S&P's up by 10 right now. We got the NASDAQ negative by 40. Dow up by 162. Stay tuned, folks. We'll come back. We'll take a look at crude. We'll take a look at gold. We'll be right back.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. I got a chart of the gold contract up here. We're up $5. This is a weekly chart of the gold contract. Let's put it back even 5 years. This is going back 3 years. You see, we're basically in a consolidation that we've been in for 2.5 years, right? Remarkable. You got into this $1,700 area in the gold contract basically in March of 2020, and for the last 2.5 years, 1,700 is the floor. Maybe you call it 1,650 recently. 2,000 is the top. We've just inched back into that area right now at 1,744. You jump over to the crude contract. Okay, you put it on the longer term time frame. Let me take off some of these shorter Fibonacci numbers to make it a little bit clearer. Now, number one, you're sitting pretty much at the 382, okay, which is an interesting consolidation area from the lows of, now I put this thing in terms of at $20 back when it was cratering to negative prices, but that's a fair area where it traded from about March until May. You had lows around $20, and from that area, your 382 is at about $82, $83. You back things off to 85.41, which is the highs, and you're just under that level. But keep that in mind, as all we've done is pull back to the 382, man, and we'll see where we go as we approach the winter. Some of the other equities that are moving today on their numbers, you got Dollar Tree out with their numbers. Disappointing, to say the least. Off 9% for Dollar Tree. They beat on the top and bottom line. Better than expected comp sales, full year earnings in the lower half of its prior guidance. So guiding down from prior for Dollar Tree. We jump over to Abercrombie & Fitch. There's a pop for you, up 16.2%. But boy, this thing's been in trouble, right? Sitting at 15 for the longest time, and you back this thing up even further for Abercrombie & Fitch. From $48, we came into earnings at about 18. So yeah, you get a pop for Abercrombie & Fitch. They beat unexpected profit. That'll always give you a boost when you're not supposed to make money and you do. Saw resurgent demand for clothing like jeans and dresses as people return to work. Yeah, Zoom out with their numbers. They disappoint as well. This one, man, down 9%. The pain just does not stop for Zoom. Thanks so much for starting your day off with me, folks. Stay tuned. I'll be back tomorrow. One more day before Thanksgiving. Our man Basil Chapman's up next. Live programming all day, folks. We got the S&Ps up by 12. NASDAQ negative by 35. How about the Dow up by 186? Stay tuned, folks. Basil Chapman, he's coming up next. Have a great Tuesday.